Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras. In April 2015, Part B, this question is from Alteration of Share Capital and Internal Reconstruction chapter. Let me read the question. The following is the balance sheet of Nirmal Limited as on 30th September 1995. In liabilities side, share capital 12%, 4,000 preference shares of rupees 100 each. The amount is rupees 4 lakhs, and 50,000 equity shares of rupees 10 each. The amount is rupees 5 lakhs, and 10% debentures. The amount is rupees 1 lakh. The creditors, the amount is rupees 2 lakhs. The total liabilities are rupees 12 lakhs. And in the asset side, goodwill, the amount is rupees 1,80,000, plant and machinery rupees 5 lakhs, stock rupees 3 lakhs, debtors rupees 70,000, cash rupees 20, and profit and loss account rupees 1,30,000. The total assets are rupees 12 lakhs. And the adjustment, the court has approved the following scheme of reconstruction. The first one is to issue 15% preference shares of rupees 60 each for every 12% rupees 100 preference shares. And the second point, to reduce the equity shares by rupees 4 each. Third point, to redeem 10% debentures of rupees 1 lakh by issue of 14% debentures of rupees 80,000 in full satisfaction. And the fourth point is to write off goodwill and accumulated losses, write down plant and machinery by rupees 60,000, and any balance left from capital reduction scheme be provided for doubtful debts. Give journal entries to effect the scheme and also prepare the new balance sheet. First, we are going to prepare the journal entries of Nirmal Limited. The first journal entry for preference share capitals reduction. In the debit side, 12% preference share capital account debtor old, the amount is rupees 4 lakhs. It means 4,000 multiply with 100. To 15% preference share capital account creditor new, the amount is rupees 2 lakhs 40,000. It means 4,000 multiply with 60. And the difference value is in the credit side is 1,60,000. That is called capital reduction. It means 4 lakhs minus 2,40,000. In narration, being the company has converted its 12% preference shares price rupees 100 into 15% preference share capital price rupees 60 and found capital reduction amount. And the second journal entry for reducing the equity share capital price. So equity share capital account debtor old value, the amount is rupees 5 lakhs. It means 50,000 multiply with 10. And to equity share capital new, the amount is rupees 2 lakhs. It means 50,000 multiply with 4. And the difference value is in the credit side is 3 lakhs. That is called capital reduction. It means 5 lakhs minus 2 lakhs. In narration, being the company has reduced its equity share capital price rupees 100 into rupees 4 and found capital reduction amount. And the third journal entry, 10% debentures account debtor old value, the amount is rupees 1 lakhs. To 14% debentures account creditor, it's a new value, the amount is rupees 80,000. So the difference value is in the credit side is 20,000. That is called capital reduction. It means 1 lakh minus 80,000. In narration, being the company has converted its 10% debentures rupees 1 lakh into 14% debentures rupees 80,000 and found capital reduction amount. And the fourth journal entry, capital reduction account data. It means 1,60,000 plus 3 lakhs plus 20,000. The total capital reduction amount is rupees 4,80,000. These are the amounts which we have already found. And to goodwill account creditor 1,80,000. To profit and loss account asset side amount is rupees 1,30,000, which we have to mention in the credit side. And to plant and machinery depreciation value is rupees 60,000, which we have to mention in the credit side. And to bad debts 70,000. It means if there is any balance, that will be considered as the bad debts. So after adjusting full value of the datas, the left amount will be, that is 40,000. That is the difference value is in the credit side. That is called capital reserve. It means 4,80,000 minus 1,80,000 minus 1,30,000 minus 60,000 minus 70,000. So we have some left amount, that is called capital reserve. In narration, the company adjusted its goodwill, depreciation of plant and machinery, and profit and loss account asset side balance, as well bad debts, and also we found a capital reserve amount. And we are going to prepare the notes to accounts for preparing the balance sheet of Nirmal Limited. Note number 1 is share capital. Under the share capital, we have to mention equity share capital. It is new value 50,000 multiply with 4. The amount is rupees 2 lakhs. And 15% preference share capital, that is also new value. The amount is rupees 2 lakhs 40,000. It means 4,000 multiply with 60. And the total share capital value is 4,40,000. And note number 2 is reserve and surplus. Under the reserve and surplus, we have to mention the capital reserve. The amount is rupees 40,000, which we have already found. And note number 3 is long-term borrowings. Under the long-term borrowings, we have to mention 14% debentures. It is also the new value. The amount is rupees 80,000. And note number 4 is trade payable. Under the trade payable, we have to mention the creditors. The amount is rupees 2 lakhs. And note number 5 is tangible assets. Under the tangible assets, we have to mention plant and machinery value. The amount is rupees 5 lakhs as per the balance sheet. And as per the adjustment, the depreciation value of plant and machinery is 60,000. That must be adjusted with the plant and machinery's original value. So it means 5 lakhs minus 60,000, we get the balance amount is 4,40,000. Then we are going to prepare the balance sheet of Nirmal Limited as on the date of 30th September 1995 and reduced. In particular column, we have to mention the equity and liabilities heading. Under the equity and liabilities, we have to mention the shareholders funds. So under the shareholders funds, we have to mention share capital. That is note number 1 heading, and number 1 will be mentioned in the note number column. And the note number 1 total is 4,40,000. That will be mentioned in the rupees column. And reserve and surplus is note number 2 heading. And number 2 will be mentioned in the note number column. The note number 2 total is 40,000, which we have to mention in the rupees column. And we have to mention the non-current liabilities. Under the non-current liabilities, we have to mention as a long-term borrowings. That is note number 3's heading. And number 3 will be mentioned in the note number column. And note number 3's total is 80,000, which we have to mention in the rupees column. And we have to mention the current liabilities in the particular column. Under the current liabilities, we have to mention trade payable. That is note number 4th heading. and number 4 will be mentioned in the note number column, and note number 4 the total is 2 lakhs. Then after mentioning these details, we have to add this amount. We get the total amount of 7,60,000. That is the total equity and liabilities value. It means 4,40,000 plus 40,000 plus 80,000 plus 2 lakhs. And Roman letter 2 is the assets. Under the assets we have to mention non-current assets. Under the non-current assets we have to mention tangible assets, that is note number 5th heading, and number 5 will be mentioned in the note number column, and the note number 5th total is 4,40,000, which we have to mention in the rupees column, and we have to mention the current assets. Under the current assets we have to mention the stock. The stock value is rupees 3 lakhs. For the stock, no note number, and the cash is also doesn't have any note number. The amount is rupees 20,000, which we have to mention in the rupees column. And then we have to add all the asset side amounts. It means 4,40,000 plus 3 lakhs plus 20,000. So the total assets are rupees 7,60,000. That's all.